Hey there, traders. Welcome back for episode number 69 from the StockBandit.tv. It's a place where you can find trading videos to make you better. And I hope that it's been a great holiday weekend for you. Got a little bit of extra time off to kind of either kick back and relax and do nothing, or knock a few things off of your to-do list. But whatever you've chosen to do, I do want to mention that if you are military or you have served in the military in the past, thank you very much for your service for this country. Our freedom comes at a very high price, and the sacrifices that those of you who are in military service or have been, that certainly is very appreciated, and I want to just give you a big thank you. Now, as we head to a brand new week of trading, it's an exciting time. There's only 4 days of trading in this week, and so we're going to have to certainly make those count. And this is the time when, as traders, we've got to take a look at the big picture, really formulate a game plan for what we're going to do and what this market could do, because we know that's going to influence a lot of individual stocks. So let's take a look at the major averages. We'll kind of examine the big picture here, and then of course we can use that to our advantage when it comes to finding individual plays that sort of match up with that. So here we go. Up first is the NASDAQ Composite Index, and as you can see here, this index has been pretty range bound here for a few weeks. It's been kind of flip-flopping back and forth, respecting both support and resistance areas, and lately we've also seen volume really taper off considerably. Whether that's due to the seasonality and you know, some schools are starting to get out, people are starting to take summer vacations and that type of thing, that may be an influence, but it also could be that this lack of volume right here is due to the lack of directional bias that we have here. We're essentially moving sideways here, and the smart money is aware of that. And so until we get a good break up through this 1785 level to break out to the upside, or we move down through 1665, which has been not only the January high, but it's also served as both support and resistance in just the past several weeks. Those are the two levels to be watching: 1665 down here, 1785 up here. But again, light volume, that's likely going to change. We are hovering closer to the lower end of this range, and I do think that if we do crack that level, it's going to lead to a pretty good move down. So be on your toes if that does occur. S&P 500 sitting above 875, a former resistance level from earlier this year, has also served as resistance just this spring, and then now it's kind of acting as support as we've kind of come down to test that a couple of times here. Haven't quite broken it yet, but if we do crack 875 to the downside, I think we're going to get a good move to the downside in this S&P 500. On the upper end of this short-term range is the 930 area, and then of course beyond that is the 943 January high. So those are the two upside levels to be keeping an eye on for the S&P 500. And for the Dow, which by the way is the least important of the big three indices to me, it is the oldest and it is the most well known, but it's only 30 stocks. So you've got to keep that in mind. And generally the NASDAQ and the S&P 500 are going to be the ones that truly lead the way. The Dow typically gets influenced by those other two, and it moves in a different fashion. But nonetheless, we're going to keep an eye on it because we know that the average Joe is going to go home and flip on the TV, and the first thing he's going to hear on the nightly news when it comes to business is what the Dow did. And so this is going to help influence some of his decisions, and that of course helps trigger some market moves. Now, for the Dow, we've got some short-term support down here at the 8,200. If that's cracked to the downside, I think we're going to get a sizable move downward. However, if we can break up through this 8,600 area, which has been acting as resistance in the past few weeks, then we may get a better move to the upside, and we might possibly come back and test those January highs. Who knows? For now, we're certainly hovering close to this 8,200 zone. That's the level I'm going to be keying on most closely in the week to come. All right? So, again, it's only a short trading week, 4 days. Make every one of them count. Thanks for joining me once again for another episode here. I will be back soon with more videos, but in the meantime, trade like a bandit.